Good day. Revolve Renewable Power is a developer and operator of wind, solar, and battery energy projects. Revolve just released its June fiscal year-end financial results, and the company achieved a lot in its first year as a public company. CEO Steve Dalton is here to discuss the results and the company's outlook. I'm Martin Gagel with Market Radius Research. It's Monday, November the 6th. Please remember this is neither recommendation nor investment advice. We're here to learn about the company. Steve, welcome back. You've been a busy guy, and we're finally able to fit in this interview. Thanks for making the time. And can you please give us an overview on the prior year and then discuss a little bit what to expect in the market for the coming year?
Yeah, sure, no problem. Great to be back, Martin. Been a while since we spoke last, but as you say, the company's been very busy. I mean, a lot of the things that we had in our financials that we just released are what we've been saying, I guess, through the course of the year. So the results are, let's say, from the various different transactions and different deals that we've done over the course of the 12 months. So you'll see kind of top line revenue just over 1.1 million, which is a function of some of the revenue that's come through from the acquisition of the Centrica distributed generation portfolio, which is over 12 months now, actually, at this stage. So it's amazing how quickly it goes. And then obviously we had a fairly significant transaction, which we've been talking about all year, that we done in January through the sale of some fairly large utility scale projects in Arizona to Engie, which I think in terms of the FY23 accounts, would have delivered around 850,000 into that revenue of 1.1. So yeah, I think the financials that we've released are kind of combination of all those kind of good things and the work that we've been doing. I think it's only really the start for us, if you like, in terms of since the year end. We've also announced a further milestone under that Engie deal, which I think will make our Q1 revenue pretty much the same as the full 12 months for FY 2023. We've obviously given some guidance as well, which I think we announced back in early September around what our revenue is going to be for this year. So hopefully investors can kind of get a sense of the kind of building momentum behind the business through these projects that we're either acquiring, through the deal we've done with Engie. We've obviously brought some other assets on stream back in May and June through the DG business. And then we've just recently announced another acquisition of some operating assets in Canada, which we're really excited about. And I think once we complete that deal, we'll be able to look at our forecast again for the next year and see how that impacts it. But we obviously expect it to impact it in a positive way as well. So huge amount going on in the business, good bit of momentum. Yeah, as I said, you're kind of starting to see that coming through in terms of revenues.
Gotcha. Well, let's start with the last of that, the acquisition in Canada. You're saying, what exactly, just as a refresher, what are you buying? And those incremental revenues that this will generate would be on top of or in addition to that 5 million-ish revenue projection you had previously given?
Yeah, exactly. So we're acquiring an existing Canadian operator and developer of hydro and wind projects based out of British Columbia. They've got a number of, or certainly interest in a number of, well, two in particular, operating hydro projects in BC, and then a majority share in the small wind project in Alberta. So those projects have been operating for a number of years. I think on average, you're talking about 20-year plus remaining on the various PPAs that are associated with them on average. It will be obviously revenue accretive, cash flow accretive to the business. We haven't given any forecasts around what that looks like, but you are right in saying that it will be or expected to be on top of the financial forecast that we announced just recently. I think in those financial forecasts, we were pretty clear that they were made up of our existing GG portfolio and revenues coming from deals that we had already signed, i.e. the Engie deal. We hadn't considered either new projects or acquisitions such as this one with the Wind River.
With the Canadian acquisition, is it just those assets you're buying, or does it provide you a platform to sort of drive additional new project development growth in Canada or elsewhere?
Yeah, well, I think that this is a really exciting thing for us. I mean, the acquisition of operating assets, we've been going on about it a good bit throughout the course of this year. It's one of our kind of strategic objectives. We've set it out fairly clearly in, I think, the updated corporate presentation that we released back in September. But this deal comes with the benefit, as you say, of giving us a platform to do more in Canada. So there's 2 development projects that come with that acquisition, plus there's a small development team as well. So we're certainly intending to use it as a platform to do more. I think back in June, we kind of started our own development activities in Canada, and we're continuing to work on those. We're pushing and have expectations that we would be able to sign at least our own greenfield, our first own greenfield project, if you like, in Canada before the end of this year, and that'll combine with the Wind River acquisition. So yeah, good bit of momentum behind what we're trying to do in Canada. Definitely trying to do more. It's an attractive market. You've obviously had the tax incentive package that was announced back earlier in the year. So it's definitely a market that we're looking to do more in. And the Wind River deal gives us an opportunity to do that. Gives us a team that are in market that know it well to be able to do that as well.
With the Canadian footprint, their expertise, does that give you sort of more synergies across the whole organization where you can maybe leverage some of their expertise in a project in the US or are they more focused on Canadian and kind of operate distinctly and your other operations focus on their own markets?
No, I think Wind River themselves have been only focused on the Canadian market, so I think that's where their expertise will come. But I think in terms of development expertise, that can be applied in any market, and I think that's what they have as well. They've obviously been around a long time, have managed to have a lot of success, developed a number of hydro projects, they've developed a number of wind projects which they've sold. They've obviously constructed a wind project as well, you know, so there's a lot of experience within the team. That can be applied to other things that we're doing. And I think that's the way the company is set up. And we have a development team down in Mexico that has been with us for a long period of time that's currently doing development work in the US. So the skills, I think, are transferable across the markets. Okay, there's always kind of market specifics around each market that you kind of need to get under. But yeah, I think definitely there should be some synergies there, but I think our focus will be on utilizing the Wind River acquisition as a platform specifically for Canada. There's a huge amount more to be done. I think a lot of opportunities there for us.
Gotcha. You mentioned your operations in Mexico. That's the Centrica assets that you acquired. You've now had them in your company for 1 full fiscal year, and it's almost 2 years, I guess, since you acquired them completely. How is that? They're in distributed generation, which are smaller energy projects versus your utility scale. How is that business going, and how is the market for distributed generation looking right now?
Yeah, I mean, it continues to remain very strong. I mean, if you look, even Martin, what we've been able to do in okay, it's 12 months since we closed that acquisition, but we obviously bought a small portfolio of operating assets. We've managed to construct a further asset, but where we spent a lot of our time and efforts since completing the deal was around building up our pipeline. And I think we've reported on that quarter on quarter. Currently stands at around 150 odd megawatts. A lot of different projects in there. So there's a huge amount of interest and momentum behind DG, just generally speaking, in Mexico. And I think actually what we're seeing in the last probably 3-6 months is it's expanding beyond that, in that this kind of nearshoring phenomenon that you're seeing is really driving a lot of investment into Mexico. Both Mexican companies expanding to deal with kind of supply chain opportunities, but also companies coming into Mexico. And when they're coming into Mexico, obviously one of the key items on their agenda is energy. How can we access the energy that we need to supply our manufacturing operations or whatever it could be? And that's both distributed generation and also large scale renewables like what we have and we've been doing down there for a long period of time. So yeah, I mean, it's still a very strong market. I think what I'd like to see from the business over the next kind of 3-6 months is more of a conversion of that pipeline into actual projects. So that's what we're currently focused on today, is actually now getting those projects that are in the pipeline into actually signed PPAs and actually starting to construct more projects.
And these projects would be ones that you own or own a portion of, and that would have an ongoing revenue and earnings stream attached to them, right?
Yeah, exactly. On the DG side, we own everything 100%. So there's no kind of joint ownership there. We own 100%. We identify the projects through our team, through our partners, and the intention there is to continue to roll out that model. I think we've indicated in our corporate presentation some of the kind of numbers that are attached to the projects. So while each project in itself is small incrementally, as you start to build some scale into the portfolio, you start to get some nice numbers behind it. So still a really important part of what we're trying to do. It allows us to continue to kind of execute projects, get them into construction, continue to build on that revenue. And I think you've seen a bit of that through the course of, let's say, FY 2023, when you saw quarter on quarter kind of revenues continually kind of ticking up. And like I say, Q1 2024 should equal all of last year's revenue, albeit a lot of that is coming from our utility scale business and that sale of the projects to ENGIE.
With the distributed generation project, you have multiple smaller projects in there. Do you announce each one of those as they go forward, or are they too small and you just sort of announce the portfolio performance at the end of the quarter? What detail of disclosure do you give on the DG business?
Yeah, no, certainly. I think we would, like, as we get projects signed and into construction, I think we would definitely be looking to update the market around those kind of developments, because I mean they are small projects, but they're still, when you're talking about a kind of 1 million revenue for last year, I mean every one of those projects would still be material in that context.
Yeah.
So I think the intention will be, as you get them signed, yes, definitely update the market. I think what we've done over the course of this year is trying to give more visibility on the pipeline. So what does the pipeline look like in terms of size? What does it look like in terms of the breakdown of the different types of technology that we're seeing, the different opportunities? Again, I think we have provided a bit more guidance in our corporate presentation around when we expect some of those projects to reach ready to build, where we signed letters of intent. So like we do have letters of intent in hand for new projects. So yeah, like we're providing more guidance to the extent that we can. Obviously, you don't want to be reporting on 30, 40 projects in a pipeline. So I think you kind of need to balance the disclosure around really, and I guess we do this on both sides of the business, both on the utilities side and the DG, but I'd like to be only announcing projects that we've actually signed the PPA and we're actually starting construction. On the utility side, we only like to really announce projects once we've got land control and site control, even though there's a much bigger pipeline behind the current portfolio that we have in our presentation on our website that we're working on. But until you can kind of get that land signed up, they don't really crystallize into being a real project for us.
Okay, that makes sense. And on the utility scale projects, the energy sale, and it was sort of I call it your blockbuster deal of last year. And it's not done and complete. You've hit some milestones which have triggered some additional payments. I believe there are some additional milestones you need to go through. Could you talk about that energy deal and what investors should be on the lookout for?
Yeah, well, I mean, I think we've tried to say as much as we can. Obviously, it's we have kind of obligations under the deal in terms of what we can disclose and whatnot. But I think we've provided, I would hope, pretty clear guidance. Maybe investors have to dig a bit into the presentation to kind of figure out what the numbers are. But I think we've clearly said that transaction was worth $50 to $62.5 million to us across both of those projects. It's fairly simplistic in that there's only really 3 milestones attached to that amount of money that we're hoping to get. They were kind of interconnection studies. So when we got the next interconnection studies for both of those projects, it was when construction starts and when commissioning. During the summer, we met the interconnection milestone on the Parker project, so that generated another 850,000 of a milestone that's going to feed into our Q1 revenue. We've also clawed back a bit of deferred revenue from the original sale back in January. That's where you're getting up to the kind of 1.1 million that we expect from that deal in Q1. I think we have provided guidance on when we expect the next milestone, which is the first half of next year. hard to pin down an exact date, but we've at least given some guidance that we expect that next payments first half of next year. And then beyond that, I guess we just gotta wait and see when NG decide to hopefully get the projects into construction and then commissioning. So I think that's as much as we've kind of been able to say to date on it. I think if you go back to our original forecast, when certainly the projects were let's say within our control and we hadn't sold them, I think certainly we had indicated or had expectations that the projects would start construction in kind of 25, 26, that type of time frame. But obviously that's not under our control at the moment. But I think from a project development perspective, and again, if you look at kind of guidance and illustrative examples that we provide in the corporate presentation, we say it's like 3 to 4 years of a development timeline. We started development of both of those projects back in 2021. So you're almost 2.5 years into development already. And we had obviously had a reasonable amount of work done before we had sold the projects as well.
All right. Can you talk a little bit about the macro environment? You said in Mexico and in Canada as well that things are well. We do have, it's hard not to bring up the higher interest rates, which affects project financing and other sorts of, I don't know, macro forces that are going on. Some new headlines you read, there seems to be a bit of an ESG or green energy blowback. Some states in the US aren't liking it so much for whatever reasons. Can you give us a bit of an overview on the macro winds that are blowing in the space?
Yeah, I mean, I think at a high level, because I mean, there's some of them which don't apply to us, and I think if you look at the general market commentary around, I think renewables, the sector seems to have got hit hard by a lot of the things you mentioned. Higher interest rates, higher cost of funding, a lot of the supply chain issues which would have happened over, particularly during the COVID period, where there was a lot of supply chain constraints that led to a lot of increasing prices that impacted a lot of projects, particularly in the offshore wind sector and other kind of large projects. A lot of that has let's say filtered through this year, which looks like a negative for the sector. But I think what you're seeing on the ground is continued momentum behind renewable projects getting built and delivered in the market. As regards, let's say, the impact on our business, it doesn't really impact us at the moment. One, because we're not out raising long-term project financing for our utility scale projects. We're still in the development phase. So it doesn't really impact us. I think the things that we're seeing which have us, let's say, more excited are particularly down in Mexico. You've got a lot of this nearshoring driving an increased appetite for renewables. So we've certainly seen a lot of industrial interest and demand in the market over the last 3 to 6 months. Their requirements to secure renewable energy for their manufacturing facilities has not gone away, despite all those negative headlines. That demand is definitely still there. We're seeing that very, very strongly. Similarly, on, like I mentioned, the DG earlier, like we're not seeing a pullback from corporates on the DG side because of those macro, let's say, headwinds or whatever you'd like to call them. The requirement to still secure kind of sustainable, clean energy for your business is still there. So that we don't really see that impacting us. So I think, yeah, on a day-to-day, there's nothing there that's impacting us, albeit you will prefer certainly a more positive outlook for the sector as a whole. But these things are cyclical as well. Like, they will come back. The supply chain issues will get sorted out. Oil prices is high. Natural gas prices been high. Power prices are going up. That helps renewables on the other side, but they don't always work in tandem. There's sometimes a bit of lag on supply chain pricing coming through, where power prices are, and the interest rate cycle as well. And on interest rates, I've said it probably, I don't know if I said it on a previous interview with yourself, but certainly talking to investors, I always highlight that a lot of the projects, let's say particularly in the renewable space or just power generation, are generally borrowing on the long term. So this is like 15 years plus. With probably the exception of the US, I think certainly in some other markets, the longer end of the yield curve is actually inverted. It's probably cheaper to finance it on the long term rather than the short term. So the impact is probably a bit less than you would think when you read the short term interest rate headlines, I'd say.
All right, that makes sense. Steve, I think that was a pretty good overview on what Revolve has accomplished and expects to see in the coming quarters and years here. Any final wrap-up comments before we close this off?
No, I mean, I mentioned a couple of the points already, and I think they're outlined in the news release around the FY23 financials. I mean, the Wind River completion of the Wind River deal is expected later on this month. I think we've announced something around the Vernal project where we expect to sign an interconnection agreement, which will be a big milestone for that project. That'll be the first kind of interconnection agreement we've signed for a project in the US. So I think we've again made some announcements recently on that we expect that before the year end.
How big of a project is that again?
So that's an 80 megawatt hour project. Again, it's a key project in terms of our strategy for next year and into 2025. Yeah. Signing an interconnection agreement I mean, interconnection generally in the US is one of the kind of challenges at the moment from a development perspective. The fact we've managed to get through that, all the costs, and again, I think this is something we've announced, but all the costs associated with the project are in line with our expectations. We're hoping to get that signed before the year end. That'll be a kind of big milestone for that project and sets us up well to try get it ready to build by the back end of next year. You know, so there's a lot of positive things happening in the business currently, either between the acquisitions, our own pipeline, and I think as well on the DG side, we'd certainly hope that we'll be able to sign a couple of these new DG projects by the end of this year. And we've got a fairly ambitious target for to June next year, which we still need to deliver on. So there's a lot of work and attention going on around there.
All right, excellent. Steve, thank you very much for bringing us up to speed and giving us an update here. Thanks a lot. Have a great day, and I'm looking forward to getting future updates. Cheers.
Thanks very much, man. Appreciate it.